them to pop on like that all the time.
Yeah,
It is early.
I'm a late night bird myself. I'm normally not in bed till about midnight or 1, so 7:30 is a little early. I'm normally up at like 8:30 and working at 9.
You millennials are built different than us old people.
Millennials? Am I a millennial? I don't even know. I'm 37. I'm 37 years old. Does that make me a millennial?
Yeah, you're right in there.
All
Right
right.
in there.
I don't feel like I'm a millennial.
I think I think millennials are up to, I think they're right at 40 now for millennials. I don't know. That's crazy. Yeah, we were, man, even New Year's Eve, we were in bed by 9:30. We were on our bike the next day by 6:30. And it's just a different lifestyle.
Nice.
And yeah, that's all right. I guess it's working for me and my wife right now. We'll see.
Yeah.
Kind of miss drinking, but
I just work a lot. Like last night, I was working till about 7:30 at night here in Michigan. And then I normally work out after I'm done working, and then I eat. So by the time I actually sit down and relax for the day, it's like 9:30 at night. That's why I stay up a little later. I need some time, watch some TV, relax. Normally,
on. Hey, Travis, are we recording this? I think we're already recording. Yeah, it is recording. Okay, awesome.
Yeah. Yep.
We're at, I'm not a big fan of waiting. If these guys don't want to show up on time, then they can catch the replay. But
Yep, that's
and I
active.
want to honor Steven's time as well. Steve, give us a heads up. Tell us about a little bit about you and quickly about what you do for us, and then let's talk about VA loans.
So me personally, well, my name is Stephen Gray Haro. I'm 37 years old. I've been with Caliber for 4 years now. I've been doing mortgages for about 9 years. I spent my first couple years at Quicken, and I was at United Wholesale for about 4 years before coming over to Caliber. Me, my current VP, and 4 other account executives actually left United Wholesale and opened the first inside account executive office for Caliber. And that's what we've been building the last 4 years. So I'm your rep. Obviously I help you with your loans and pricing and products and helping clients when we can and making sure everything's nice and smooth going through. And VA, we do a lot of VA. Let me go ahead and share my screen and I'll start going over some good stuff with you guys. Yeah, VA has been a big focus for our company. We're actually, here's just a couple recognitions. You guys should have got an email yesterday with some incentives that we have for your office this month. And in that email, there was also some recognitions. If you look down here at the bottom, 1 of 4 military-friendly brands. So we do a lot of VA. We do a lot of VA initiatives, a lot of VA training. We have a heavy focus on helping the veteran community. If you think of the thousands of lenders that are out there, only 4 of them have this brand ranking, and we're one of them. And that's mostly because of how we handle our loans. And the other reason is the fact that we service our loans. If you look at our top recognition here, Fannie Mae Servicer Total Achievement Award. So we service 90% of our loans and we don't sell our servicing. So we keep our clients in-house for the lifetime of the loan. And that has some cool benefits for the borrowers if they're coming back to us. And we specifically service almost all of our VA loans. So we're heavily focused on VA. As far as like what we do in VA, we've got a few different benefits. We work with all types of veterans. FICO scores, we only require 1 FICO score reporting. We can do manufactured homes. We allow for manufactured homes through VA. You can use split entitlement. Are you guys familiar with entitlement at all?
Yeah, and that's, so when you say split, that means between 2 service members.
So it depends. Yes, you can do 2 service members, and then we would split the entitlement equally. We can do a non-spouse, non-vet, where the service member will put their portion of a guarantee down, and then the non-spouse, non-vet can actually put down a part of a down payment.
Right.
To qualify for the loan as well.
And then for split entitlement, so say I bought a house, a VA guy he's stationed in Florida, buys a house for 100 grand, 150 grand. And then he gets restationed here in San Diego with the loan limit that's now like, I don't know, 850.
Yeah,
He can potentially split that entitlement and use the remaining amount up to our county loan limit to buy a second property. Is that correct?
correct. Yep. We can see
Nice.
how much he has left over. We can use that.
Nice.
If he's not retaining the other property, we can actually restore his entitlement for them too.
Okay.
So we would have full entitlement if he sold that
Nice.
property and needed to restore that. They just lowered, or I'm sorry, they just raised the loan amount. We can now go up to 2.5 million with full entitlement, which is
Okay.
pretty big amount. Pricing super sharp. I sent you guys that email with those incentives yesterday, which looks like this. Government loans, we're giving incentives up to 75 basis points on top of our regular pricing,
Okay.
which is a big bonus.
Absolutely.
Yep. So pricing's super sharp. We're always right in the top for VA pricing. We can do purchases down to 580 FICO. We can do IRRRLs down to 580 FICO. We do allow for cash out up to 100% LTV with 640 FICO. The 90% option is quite a bit better. When you go over 90%, there's an adjustment, but either way, it's still very competitive. But we do allow you to go up to 100%.
Awesome.
Loans over $1 million require 45% DTI unless we have residual income. This next point is we're one of 4 military friendly brands again. We service our loans. Another really cool thing that we do that's a little bit unique is we send them challenge coins. And I'm going to send you guys emails with all the information that we go over. There's a link here you can click on. And it kind of talks about challenge coins. So challenge coins are something that veterans get while they're in service. Normally, if you meet like a general, if you meet like a colonel, a lot of times they keep challenge coins in their pocket and they hand them out to people that they meet that have done something good while in the military, and they collect these challenge coins. I've actually talked to a couple veterans, and they say the challenge coins are cool. They actually use them for like drinking games.
Okay.
And normally you go to the bar, you pull out your challenge coin. Whoever has the highest ranking challenge coin, the other guy buys them a drink. So that's what I've been told from a few different people. I don't know that much about it. That's just what I hear, which is, pretty funny. Who's got the bigger coin? You're buying the drink.
Right. I like it.
Yeah. And then, so IRRRLs, VA IRRRLs, there's no admin fees. So we waive the underwriting fee on IRRRLs. We allow for IRRRLs on second homes and investment properties. Obviously, there's no income on the 1003, so we can skip the income. There's no appraisal needed. It's really quick, easy process. No AUS needed. Mortgage only credit report, so we don't have to list their debts or liabilities. And if we service the loan, we can net their escrow account, which is pretty cool. Whatever's in their account, we'll deduct that from the payoff that we pull, and it gives them a lower loan amount.
Awesome. I have a couple questions on that list.
Yeah.
So for a purchase, what is the admin fee for a VA loan? Your standard 900, 895, 995?
Yep, 995 standard underwriting.
Okay, and then let's talk about the second bullet point. So second IRRRLs are allowed on second homes or investment properties. So to get to that point, this particular borrower would have at some point had to live on those two properties as a primary to be able to get that original VA, correct? So now they've moved out and they've kept it as a rental or a second home.
Let me take a look at our program guides real quick, and we'll correct. Yes. So you can only purchase a home as a primary.
Okay.
Yeah. So if you bought another primary, you could call that your second home, or if you were renting it out, you would call that your investment property.
Got it. As long as it started. So the idea of the VA is basically a benefit to help you buy it and live in your own house. If you want to buy a new house and say use a conventional loan, keeping this loan going because it's got a great rate or whatever, you're still able, even though you're not the primary, it's not your primary residence, can still do the full URL as if it was. That's awesome.
Correct. Yep. And then cash out, we would keep it as a primary. We can only do cash
Okay.
out on primary.
Got it. Okay. Makes sense.
Yep. So this has got some really good stuff in here. Well, let me send now. Who do you want me to send these emails to? Do you want me to send them to you, Travis, or?
Yeah, go ahead and send them to me, and then I'll be able to forward them to the team.
Okay. So the next flyer I have here goes over some really cool resources and tools that we have. I'll send this to you as well. If you guys want to get involved in some VA training, we've got a full training webinar that goes through VA origination from A to Z. So they dive into things quite a bit deeper than I do. I'm very good with VA, but I'm not like a VA expert in the weeds, know everything about everything. I'm pretty good. But these guys, if you want to join a webinar, you can sit in on the webinar. They teach you everything you need. They held a Q&A session after the recording. So, brokers asked a bunch of good questions. They responded. There's a fact sheet there with all those questions and answers. So that's good information too. We have a Caliber military lending website that has some pretty cool tools on it. This website and all of this stuff is accessible to you. You can save this and use any of these tools. The COE help website. So if you need a certificate of eligibility, they can help with that. If the veteran can't get it or you can't get it. If you need to restore entitlement, you would reach out to them. The VA support team here is for scenarios. If you need help structuring a loan, if you need, just any guideline help on VA, you can reach out to these guys. This team is manned by veterans and they're super helpful. I mean, they can help answer pretty much any question we have.
And are those Caliber employees, or is that a third party?
Yeah, so these are all Caliber employees.
Oh, excellent.
Yep, these are veterans that work and run our military lending site. They're Caliber employees, and they've helped us build our VA lending platform over the last couple of years. So they're really good guys.
Nice.
Yeah, Brian Burgess, I talk to him, I don't know, every couple of weeks, just about new stuff and what's going on. So yeah, you've got access to the support team. VA appraisals, you guys order VA appraisals through the website, the VA website, and then assign it over to us. If you're not familiar with how to do that, we've got a cool little video right here. It walks you through how to order a website or an appraisal on the VA website.
Okay.
I've also got some other third-party stuff. If you just want to check out different blogs, people in the veteran community, here's a couple different third-party just blogs and things you can get involved in. And I've got some other training as well down here.
Nice.
So this is like everything you need to be a VA pro is in this email right here.
All right.
And I know you guys are, you said you were looking at the San Diego market for veterans.
Yeah. Cool. There's bases all the way up. I mean, up through Orange County, LA. There's bases in Riverside. I mean, it's anybody that really is close to even a single military base has a lot of opportunity, I think.
Yeah, absolutely. Do you guys have anybody in your office you would consider like a VA expert?
Probably me, because I come from a VA specific, a military specific lending company. One of the reasons why I probably know a little bit more than some guys. But yeah, it'd probably be me at the moment. Yeah, and since I'm the only one actually live, it makes it easy for me to claim that.
Gotcha. One thing I always suggest, get really learned up on the VA stuff, take the webinars, learn as much as you can, and see if you can't put together or offer a training course
Okay.
for local veterans.
Yep, those are huge.
That is huge. A lot of when you're in the military, they don't teach you about your entitlement. They don't teach you about your VA benefits. They teach you how to do your job and what they need you to do. I know quite a few brokers that have had a really good outcome, reaching out to local bases, offering to put together a class for veterans and teaching them about their benefits. Go in, hand out business cards, hand out flyers, and then you can start to really build a base of some good veterans. And when they need help, they're going to call you. And they're
Right. Yeah, that's awesome. So looking at this one, loans over 1 million require 45% DTI unless 250% residual income. Then it jumps to 55%. Explain what
correct.
residual income is in case someone doesn't know, because that's different than DTI and it's different than any other loan.
Right. So residual income is in excess. It's excess income from your debts. I'm actually going to send you a document that goes over how to calculate that.
Okay.
Residual income based on household, residual income calculator. Yeah, I'm going to send you some cool tools too,
Okay,
because there
great.
are some things to look out for with VA loans. If you do need residual income, yeah, you want to know how to calculate that. So I'm going to get you guys a calculator. On VA IRRRLs, if you're going borrower paid, you can only charge 1%.
Okay, which is the max. That's comes down from the VA themselves as part of their, I guess, their guarantee of covering the 25% of the loan.
Yeah, so there's only certain fees that are allowed to be charged to the veteran as well. So I'm going to send you a chart that goes over the unallowable fees. Normally,
Uh-huh.
if you go borrower paid, you're as a loan officer making like 0.8 or 0.85. A couple of those fees end up getting kicked back to the broker, unfortunately. And I've
Right.
got a worksheet for that. And then also for VA IRRRLs, and they have a recoup period if you're rolling in any cost. It's a little bit different than an FHA streamline.
Uh-huh.
Streamlines, you can't roll in any cost. VA IRRRLs allow you to roll in cost, but the veteran has to recoup that within 36 months.
Right.
And I've got
Okay.
a
And then, man, well, let's see. That's awesome. Yeah, yeah. That's only, and then I think the other, if I'm correct, I believe the other requirement for as part of the recoup is to be able to do the EARL specifically, which is basically a rate and term reduction.
Yep.
Does the rate have to drop 0.25% or 0.5%, I think?
There's the tangible
I think there's a
benefit.
specific amount that it needs to drop unless you're and then yeah, I believe that's part of it.
Yeah, I'll have to look that up.
Okay. Yeah.
I know there's a net tangible benefit that we have to meet.
Uh-huh.
And I'll see if I can get the worksheet with the list of what the net tangible benefits are.
Right.
Worksheet.
And then for the VA loans, because this actually comes up pretty more more often now than ever, this manufactured home option, that still does need to be on a solid foundation, correct? Not like a mobile home park.
Correct. It has to be on its own foundation. It can't be in a mobile home park. It can't be in a flood zone.
Buying the manufactured home and the land with a VA loan.
Correct.
Awesome.
Yep. So a couple other things, the funding fees. Funding fees are different based on if you're putting money down and entitlement use. So I'm going to get you guys a funding fee table chart. So you guys have that. We also offer manual underwrites. So if you have a client that goes refer eligible, we can do
Okay.
manual underwrites down to 600. 600 FICO. The DTI cap is 41% unless we have residual income. Then I believe
Okay.
we can go up to 50%.
Awesome. Okay, that is definitely helpful. And then the jumbo at 2.5 million, that's Caliber's overlay, correct? Because VA doesn't have a limit on this type of loan, but that's your guys' limit, right?
Let me look that up. VA max loan amount 2022. No, that's 647, 200. Let's see, max. Yeah, I think that the VA caps it at 2.5 million because we got it. I got an update. It was at 1.5, and we got an update at the end of the year that they were moving it to 2.5.
Okay.
So I think that that's
I see what I see where it is. It's under conforming. Got it. So where we
yeah, that's for conforming, but I don't want conforming. I want jumbo. Yeah, I think that's a VA thing. I don't think that's a caliber thing.
okay. Perfect. 2.5 million is plenty.
Yeah, I mean that's a lot of house.
Yes. Awesome. Okay. And then so with VA, do you guys have what were the basically like the benefits or the reasons that you guys got that, top, VA servicing award, top one, one of four?
Um, Part of it is due to our initiative for training,
Okay.
training loan officers, training brokers, helping them be efficient at helping veterans. Part of that is due to our servicing platform.
Okay.
The fact that we service our loans, which is a great benefit in general. Most large lenders, Quicken, UWM, other lenders, they don't service their loans. They do for 8 to 10 months, then they sell them. We
Right.
keep them. We keep them in-house. We keep them protected. We don't sell their servicing. We do a really good job servicing their loans. So that's part of that. Our underwriting guides, we work with the VA directly.
Okay.
They've helped us really put together a good platform for underwriting and underwriting guidelines. That's really it. Those are the three big key factors that have helped us get that brand ranking,
Nice.
which is pretty cool. We worked really hard to get that.
No, yeah, I mean that's definitely important, and these guys are pretty loyal, I think, too. Okay, awesome. And then so to qualify for a VA loan, we need what branches of the military fall into that? It's Navy, Army, Air Force, Marines. It's I believe it go into like Coast Guard and even I think even maybe lifeguards because they fall under Coast Guards.
So I've actually got another document I'm going to send you that goes over all of that good stuff. Let me pull that
Awesome.
up. VA quick reference guide. Let me move this document over. So this is a cool little sheet that I'm going to send you. It goes over, this has residual income on it, but I'm going to send
Nice.
you an actual calculator. It's got the funding fee table on here. And then down here, it's service requirements. Let's see, does it have everything in here? Okay, here, right down here, other eligible persons, active duty members, reserve, guard, unmarried surviving spouses, time required. It goes over the time required in the military.
Great.
Yep.
Look at
So
that.
all of that information's here in this cool little chart.
Nice. So scroll back up right here to this top. So and coming from a VA lender, we found a lot. So this subsequent use fee. So this is basically if you meet a person that's qualified to use a VA loan, they currently have one, and even if they're going to sell their property and buy a new one, they still fall into the subsequent use category, and that 3.3% hit is on the purchase price. So we found a lot of times in that scenario, VA wasn't always the best because it's a big fee. And the nice thing is, I believe it can be wrapped into the purchase loan. Is that still correct?
Correct. Yep. It gets
Right.
tacked onto the loan. Yep.
So although you get billed for it, you can wrap it into your loan. So essentially getting a loan for 103.3%, which makes it definitely doable. Now, I think is it 10%? That 10% disability waives all those fees?
I'm not sure what the
Either-
percent, I'm not sure what the exact percentage is.
It's either 10 or 25. And that usually is stated, I think, on the COE.
Correct. Yeah, that we go off whatever's on the certificate of eligibility. It'll say tax exempt right
Uh-huh.
on the certificate of eligibility, and then it gives the entitlement code and the funding fee, or
Nice.
the guarantee fee.
But this will
Um,
be useful because it allows us to kind of understand like the little bit of fees for that loan. So that'll be a great tool to share with the team.
VA reference table guide. That's really all I've got planned for us today for VA.
Awesome.
Quick overview of what we do, the resources that we have, what kind of loans we look for to help veterans. So really the rest of the time is yours. Do you have other questions on VA? Do you want to talk about any other products, non-QM, anything about our process?
Yeah, actually, so if you could just spend us a few minutes and just talk about non-QM would be great because I feel like we're probably coming into a season where we're going to have buyers that are using more bank statement loans and things. I have a borrower actually right now. Looks like he's probably brings in around $11,000 a month, but on his taxes, it looks like he makes under 50. So, I'm trying to explain to him how we can work a different type of loan, like, because those are, if I'm not mistaken, I've never done a bank statement loan. Been fortunate to do a lot of military that have, regular pay, but I believe that it jumps in price a little bit for the borrower, but that the bank statement loan showing that this particular guy does bring in on the regular $11,000 a month, it allows him to buy at a higher purchase price.
Yeah, so the bank statement options are really cool. We've been seeing a lot more of this lately. Now, these products are specifically for self-employed clients.
Okay.
It's for clients that are self-employed. They write stuff off. They don't show much income on their tax returns. You're right. We're not using tax returns. So for this program, we don't want your tax returns. We don't want income documents. We're not looking at any of that. You do not
Okay.
submit tax returns. We are just looking at the bank statements. We do have an expense ratio that we use. The default is 50%. We can go up to 75% with a CPA letter.
Okay.
And the good part about that is you don't have to figure out what the income is going to be. My team does that for us. So if you have a client that you think qualifies or you want to have, income underwritten, you would send me either 12 or 24 months of bank statements, the most recent within 30 days. I submit that to my team with a questionnaire that I have you fill out that talks a little bit about the business. And they come back in about 48 hours and tell us what income we can use to qualify the client.
Okay. Nice.
Yep. So they do most of the hard work for us. Once they tell us what we can use, then you can put an offer together for them.
And
But
so
we allow.
in that scenario, Stephen, so we get the client, they get us the bank statements, we email that off to your team, and then when they come back to us in 48 hours, they're going to say this buyer, it appears that we can use a qualifying income of $9,000 a month, and then we just load that into our system and start running the loan as if I had the documentation for $9,000 a month.
Exactly. Yep.
Awesome.
So for the bank statement program, you can do primary, second, and investment properties.
Nice. Okay.
We can do purchase, rate and term, or cash out on primary, second, and investment. For purchase loans, we can go up to 90% LTV. So you can do 10% down,
Okay.
up to 2 million. We've got a max loan amount of 3 million. So you can do a bank statement option up to 3 million. FICOs, we go down to 660. So that's a minimum FICO. That's really all there is to the bank statement option. You look at the FICO LTV, make sure that your loan fits. We send in the bank statements. My team overlooks them, and we work on setting it up for the client.
Excellent. This will be good. Could you forward this to me too?
Yep, I'll send you an email with all of the non-QM stuff that we're going to go over. I've got
Awesome.
2 other products that are actually becoming really big. We're seeing a lot
Okay.
more of this stuff out there. Smart Vest, this is for investors
Okay.
looking to buy investment properties. And again, this program here, we're not looking at their income. So we don't want tax returns. We don't want their income documents. We're just looking to make sure that the property cash flows. So the mortgage is being covered by the rent. And I'll show you what I mean. There's a calculation for that in here.
Right.
So we need to have a rating of 1%. What that means, let's say you're getting $2,000 a month rent. If you're doing a purchase, we're going to get a rent schedule. If we see rent in the area is higher than the PITIA, if you look at this example, if you take $2,000 rent divided by 1,500 PITIA, you get a 1.33 debt coverage ratio.
Okay.
That's what DCR is. As long as you're above 1%, you qualify.
Got
That
it.
property qualifies.
And so question on this. So what I've seen from my experience with, the typical family that wants to, just get a second home, maybe, maybe start their first investment property scenario is because they're not currently landlords, they're not able to use rent like this to qualify. Is this a different program than that? Like, could I go and use this program, acquire a property that's making that I know will make that $2,000 rent, never being a landlord before, and qualify for that loan?
Yes.
Awesome. Okay.
So here are the guides for first-time investors.
Oh, perfect.
This program, we see some first-time investors. Most of the time, it's people that are looking to build their portfolio. One of the nice parts about this program is it allows for 20 financed properties instead of being capped at 10, like Fannie and
Okay.
Freddie. So you can have up to 20 financed properties. If you have a history of owning investment properties, then that's good. If you're a first-time investor, there's a few additional guides we have to follow. You need a 700 FICO. The LTV is capped at 75, so you have to put 25% down.
Okay.
The borrowers must have owned a primary for at least 12 months and have a 12-month housing history.
Okay.
36 months of credit history. And then that debt coverage ratio has to be a little bit higher.
Okay.
So normally we're at 1%.
Yep.
If you're a first-time investor, you're at 1.25.
Okay. No, I mean, that's it, definitely a few more limitations, but it's not dramatic, especially for a first-time investor that's never been a landlord before.
Right. We're looking at first-time investors. We're not looking at their income. It's a little higher risk.
Mm-hmm.
We're just looking at the property itself. So yeah, there's a couple additional things that they need to meet.
Right.
But
so to use this loan, the client that's using this loan is basically he has down payment money, and that's it. And he's going to go in, and his goal is to acquire a property that's going to, be that's going to be able to make revenue basically day one at closing. And in
correct.
that scenario, would you need to come to closing with a signed lease?
Well, it depends.
Okay.
So we can do purchase, rate and term, or cash out. If
Okay.
you're doing a purchase, no, we don't need a lease. We just need a rent schedule from the appraisal showing that the rent is going to cover the mortgage, but you don't need a lease.
Got it. So in that scenario, I'm looking at a house in San Diego. It's a 3.2. The normal rent in that area is at 3,500, which is, we assume I can get that when I acquire the property. And my loan amounts, my loan payment is going to be $2,000. So in that scenario, I would qualify.
Correct. Yep.
Awesome.
And this is for savvy investors. Some people don't want to pull out all their tax returns, all their K1s, all their property stuff. or maybe they don't show a lot of income on their tax returns. You know,
Right.
we're not looking at your income. We're just looking at the property. Now on a rate and term refi, that's when we're going to look at the leases.
Okay.
Yeah, we're going to see exactly what you're getting and make sure that it's covering your mortgage.
And how much and how much of a rate hit is this compared to say like buying a second home?
Let's price one out real quick.
Okay.
Um,
And I asked that specifically because I actually lost a deal with an older client. They owned two properties. One was being used as a elderly care facility, but which they ran the business also, but the business wasn't paying the rent. They were just paying the mortgage as they both owned as a second home. And the bigger problem was for them wasn't that they necessarily couldn't qualify. They just couldn't find the paperwork. Like it was the amount of paperwork that I needed uh, was so much that they just couldn't get it. This seems like something that could get them what they wanted with a lot less paperwork.
yeah, absolutely. So I'm going to do 850,000 sales price, 25% down.
Okay.
I've got non-conforming. If you're ever pricing these options, you always have to check the non-conforming box to pull up non-QM. So we'll do just regular detached investment property. What's a good zip code in your area I can use?
Let's do 91941.
Okay. They're an investor. Their FICO is probably good. We're going to use 740. Now, there's a few different options that we have for the investor product. There's a regular 30-year fixed. There's
Okay.
a 1-year prepayment penalty option and a 2-year prepayment penalty option. The 2-year option offers better pricing. We're expecting the client to stay in their loan for at least 2 years. But you'll see the options we have. It's called SmartVest is the product for
Yep.
investors, SmartVest. So the 2-year prepayment penalty option with your compensation included looks like it's at 5 1/8. But let me open this up and see if there's anything lower. Yeah, so we'd be at 5 1/8, giving
Okay.
$573 credit.
Awesome. And then this, I'm just going off of rates. This is probably low 3. So it's probably about a 2-point hit for that particular scenario. Maybe 1.5, but allows you to get into a prop. The nice thing is, even though this rate's a little higher for the client, the way I see it is the properties is doing all the heavy lifting. You're paying a little bit more, but that's already qualified into the purchase contract, showing that you're still going to be profitable.
Right.
Awesome. Awesome.
Yep.
Perfect.
So that's pretty much it for the investor product.
Nice.
Yeah, we definitely are
Okay.
seeing a lot more of that. We came out with these products. We had a bunch of products before COVID, then we had to get rid of them when COVID came out. We just came back with these products about 2 months ago, and we've already been just hammered with these loans. So we know they're out there.
Yeah.
You just got to market them and, you know, reach out to the right clients. Smart Edge is the third non-QM option that we have. We call this our near miss jumbo.
Okay.
This is for clients looking for jumbo loans, but have had derogatory events.
Okay.
Regular jumbo loans don't allow for bankruptcy, foreclosure, short sale. You can't have derogatories. Smart Edge allows you to have derogatories as long as you're 2 years out. So if you had a foreclosure 2 years ago, that's okay. You can still get a jumbo loan. Max loan amounts $3 million. We can do jumbo loans with 10% down up to $2.5 million. And we can do jumbo with derogatory events down to 660 FICO.
Okay.
So 2 other things that are pretty cool about this product. This product also allows you to take cash out up to 90% LTV. So if you just have a client that wants to take out some extra equity, they want to go to 90% instead of 80%, you can do that on this product. You need
Right.
740 FICO up to 2.5 million, but this will allow you to take out more cash if you need it.
Yeah, that's awesome. Wow. Okay.
The one other thing for this product is it allows for non-warrantable condos and condo tells. Do you guys run into that at all?
No, actually, I believe you were the first time I'd heard of a condo hotel even referenced that way. There's a couple downtown that have like that concierge desk and things like that, but it's not super common. There's probably, I bet you, and that I could guess is probably less than 25 or 30 of them.
Gotcha. Yeah, they're I mean, they're real big in Florida. We do a lot of them in Florida. They're here and there in California. Yeah, it's mostly resort areas, things like that. But if it does come across your desk, you do have an option. We can do non-warrantable condos and condo tells. Normally the real estate agent or the client knows if it's non-warrantable. If they don't know, when we get the questionnaire in and my team reviews it, they'll tell us, it doesn't qualify for Fannie or Freddie.
So in this scenario, if we're running a typical conventional loan and in the middle of, let's say underwriting's looking at this, would they come back with someone from you guys, like, let's say, point out, hey, we could probably switch to this type of loan?
Well, they're going to come back and tell us that it's non-warrantable.
And then we know we can go here.
And then it's my job to get with you, take a look at the file, see if it qualifies for non-warrantable based on the structure.
Okay.
And if it does, then we would flip it and send it to my non-warrantable team and see if they can get it approved.
Awesome. So that's great, because that does come, surprisingly, that comes up more often than not, especially with, let's say, inexperienced listing agents. I'm not even going to say lazy, just inexperienced, that hasn't had, an unwarrantable condo, deal, that they learned this problem, because it can come up in escrow. A lot of times I've had that where not, for instance, just basically not qualifying for VA where they thought it was, and you're showing. So it's such a bummer when that happens.
It is. Nobody likes to work through a loan, get toward the end, and then find out your condo's not approved. That's not fun.
Yep. Awesome. All this has been, these are huge programs. I appreciate the VA information. I'll follow up and check in. I'll probably watch some of the webinar for sure, but then I'll try and get some of the other guys and potentially add some of those links into our back office, so this information is readily available.
Yeah,
for the guys.
It's totally accessible. It's all for you to use. All of those links are for you guys. And if you have questions on any of it, let me know. Well, cool, man. Yeah, that's a lot of good stuff. Is there anything else you guys want to chat about?
I have one super quick question. I probably already know the answer, but do you have anything for 5+ units?
1 to 4 units. We're looking for 5 units. I don't think so. I believe SmartVest 1 to 4. I don't think I do. Let's see. 1 to 4 units. Yeah, we're capped at 4.
Yeah. Okay.
Yeah.
No problem.
Yep. That when you get above 4, it starts to get into like the commercial lending space. And yeah, we don't have an option for that.
Yeah, I wasn't sure because you guys service your own stuff. If you had a little something over there.
Nope, that would be cool.
No kidding. Awesome. All right, Steve. Well, thanks. Looks like there is 6 guys. Anyone else have a question? Let's see. We got one from. Paul is asking, what's the lowest you go on FHA? I'm assuming that's credit score.
So for FICOs, we go down to 580. For loan amount,
yeah, credit. So perfect.
We don't have a minimum loan amount. As long as it passes QM, we're good to go.
Okay, so for FHA loans, you can qualify potentially down as low as a 580 credit score. And is that on purchase and refi?
Yep, I believe so. I have to double check all this stuff. You know, we did this merger over the last couple months, which has been great. We've had some really good benefits, but they've updated a lot of our guidelines. They've expanded quite a bit, but they've also changed a little bit. So FHA.
Do you feel
prime.
post-COVID and say going into this year, are we gonna see stricter guidelines?
No, I don't think so. I mean, they've
Okay.
actually been relaxing. You know, when COVID first started, we had a bunch of COVID overlays that we had to follow. We had a lot of programs that were removed. But no, I actually see things going the other way. You know, we just came out with non-QM again.
Yeah.
We just lowered our FICO requirements. We used to be at 600, now we're at 580. So I actually see us expanding more.
Awesome. Awesome. That's kind of that's the trend that I saw too. Is this question was asked of me by some real estate agents too. So I figured I'd go right to you, make sure that I'm on the same page. But yeah, it definitely seems like we're getting more options.
Yep, which is good. That's what we need. We need to help more clients. Everybody should have an option, and you know, that's what we try to do. So yeah, it looks like 580 is the lowest FICO for FHA. Well, cool. You guys got anything else? I take silence as a no. Paul, it's good to see you. Well, yeah, I mean, if you guys don't have anything else for me right now, I sent you an email yesterday with the incentives that we have for this month. Keep in mind, those don't show up in our pricing tool. They get added after you lock your loan. If you're not familiar with that and you want to double check pricing with me, you're always welcome to call. We can price it out together. I can confirm with you what it'll look like after you lock, and you know, price us out this month. Let's get some loans going in. My team right now is closing loans right around 15 days, 15 to 20 days. And you know, we're ready to get them done, man.
Right on. Thanks, Steve. Sorry, I had to take a quick call and like, oh man, the intro is taking much longer than I thought. But yeah, we're all good. This is helpful. I mean, the more we know about what you guys offer, the more likely it is that we're gonna find you know, a solution for a client that you guys have for us. So I appreciate this a lot.
Awesome. Well, you guys have a good rest of your afternoon. If you need anything, give me a holler. Otherwise, good luck today, and I'll talk to you later on.
Thanks, Steven. Bye-bye.
All right, have a good one.